Hi, this is Brian with Leelyn Smith in your third quarter 2022 update. And remember, at Leelyn Smith, we try to reach client goals with the least amount of risk possible. Well, speaking of risk, the stock market has had a terrible first half of the year, reaching bear market territory, and there's a lot of talk of recession in the media right now. Now, we've titled this video, Recession Isn't a Four-Letter Word, because we like to look at recessions as opportunities. And one of the biggest mistakes in investing is panic selling, during these times of market stress. You know, Warren Buffett has a famous quote where when he was asked what his average holding period is when he buys a company, and his answer was forever, and we agree. So we're gonna define a bear market and recession. We're gonna cover what to do, if anything, during this period, and what we have done with our portfolios. So a recession is the classic definition when I was back in college studying economics was 2 consecutive quarters of negative GDP growth. The NBER, the National Bureau of Economic Research, has expanded that definition to just a significant decline in economic activity across the economy spread over more than a few months. Either way, when looked at through the business cycle, a recession is just one of 4 phases. And it's the shortest of all the phases. It averages a little bit less than a year compared to the early stage, which is about 1 year, the mid stage, which is about 3 years on average, and then the late stage, which is about 1.5 years. A recession is just a very short period and almost necessary or natural phase of the business cycle. Now, depending on the source, by the way, we're not sure that we're going to have a recession, but depending on the source that you look at, there's about a 30 to 60% chance that we will have a recession in the coming quarters. That is widely expected to be mild. And also remember that the stock market is forward-looking, so a lot of that is already priced into the stock market. Now, what to do during this period? The business cycle tends to be more of an intermediate term gauge, and it's nice. It helps to know what phase of the economy we are in. But the first thing to remember is that we want to be long-term investors. That helps us avoid overreacting and panic selling. And now that we know a recession is a normal part of the business cycle, we can look at recessions and bear markets really as buying opportunities to own these companies that we couldn't own in the past simply because they were too overvalued. And that perspective means all the difference in the world. We almost want to get to the point where we welcome bear markets because it gives us these buying opportunities for these world-class companies. So that leads us to what we have done in our portfolios. The first thing to know is that our investment strategy starts with owning highly competitive, high-quality companies at a reasonable price, and that does not change depending on the business cycle. Now, the bear market has provided some opportunities to buy up some of these world-class companies with high competitive advantages for less than we would have before. And growth stocks have been, they're always in these cycles, growth stocks get hurt first before the rest of these stocks do. And that's exactly what we've seen this time. We've picked up a few names in our growth portfolios, which some of our clients own, namely Tesla and Zscaler, a cybersecurity company. And moving on to our core model, which a lot of our clients own, we've picked up Costco and Zoetis. And we're not finished yet. We're still in the process of picking up those stocks. But all 4 of those stocks are ones that we've been watching for a long time. And we consider those companies, A+ companies that we want in our portfolio. And we may not be done yet. All of these companies, by the way, fit that definition of when to sell them, we want to hold them forever. So recession isn't a 4-letter word, but we are fully aware that this creates a lot of worry, a lot of anxiety, and makes it tough to sit through your portfolio and watch it go down through this cycle. We completely understand that. This is where your financial plan becomes so important. So please reference that plan. And it's fine to contact your financial advisor during this period, whether they're with us or not, or they're another company, that's absolutely fine. And ask if that plan is good enough to make it through this cycle. So that's the end for this time. Keep a lookout for our next video. And remember, at Leelyn Smith, we try to reach client goals with the least amount of risk possible. Thanks for watching. We'll see you next time.